We moved from London to Switzerland back in 2008 and had grown our Swiss office there. But now, for all sorts of reasons, we have a fair amount of people in the UK, so we wanted to give them a home. And we also feel that investors still use New York and London as their core areas to travel to when they make due diligence visits. So for those reasons, we are quite happy to reopen London in June. And I'm more in London now as well, really enjoying my time there. So that's
So you're not particularly spooked about the idea of Brexit and financial firms escaping to where regulators are in Frankfurt and maybe Paris?
No, I think it's overplayed. I mean, global banks will always have offices in multiple jurisdictions. And so I think the news that banks look for offices in Frankfurt does not necessarily mean that we see a massive outflow of people from the UK. And to be quite honest, I mean, from a more practical standpoint, a little bit of competition is maybe not that bad. It's easier to find offices, and maybe it's also a little bit easier on the talent pool if we get a bit of competition on that front.
Karsten, your 4 systematic hedge funds saw positive returns this year through September, ranging from 3.2 to 8.1%. Tell us what you've been doing in the 9 months through September.
Yeah, generally speaking, Mark, it's been a good year for hedge fund, predominantly on the equity side, more so on emerging markets than on developed markets, but obviously fueled by QE. Markets keep going up, keep being strong, so all equity-based strategies have done very well. We saw it a little bit more challenging on the systematic side this year, still an okay year, but definitely a bit more challenging on the shorter end of the spectrum. FX and commodities on the challenging side, equities and bonds performing reasonably well. October has been a good month for most of the systematic strategies, in particular enjoying the best part of the equity rally. So far, I would say the year has been quite okay.